Okay, welcome back to Analysis Finance. So I already told you that I'll be making a video regarding tax saving schemes. So there are different tax saving schemes, ELSS, PPF, different other schemes. Today I'll just focus on ELSS, Equity Linked Savings Scheme. So basically, Equity Linked Savings Scheme is a mutual fund. It majorly comes under the Section 80C. There are different sections. Section 80C, Section 80CC, Section 80CCA. So if you are a business student or a financial law related student, if you are learning related to that, or an accounting student, so then you might be knowing about these sections. What it says is investment up to 1.5 lakhs into any tax saving fund is basically tax free. So for example, if you are investing 1.5 lakhs into ELSS funds, and for example your investment is 10 lakhs, if you have invested 1.5 lakhs into ELSS fund, then you only have to pay tax for the 8.5 lakhs. So that 1.5 lakh thing is tax free. Also, this ELSS fund is investing into equities. Equity matlab it is investing into the stock market, share market, and particular specific companies. And there are many different mutual fund houses that provide equity linked savings scheme mutual funds. For example, Canara Robeco, ICICI, Motilal Oswal, Parag Parikh. So these different mutual fund houses provide equity linked savings scheme mutual funds. Comparatively, compared to FDs, PPF and other things, ELSS give you more returns. That's why people focus into ELSS schemes. That's the basic thing about ELSS. The thing with ELSS is it comes with a 3-year lock-in period. 3-year lock-in period matlab it comes under the long-term capital gain tax. The long-term capital gain tax with a good thing with that is when you are investing into ELSS mutual fund, the long-term capital gain tax. Suppose you invested X amount of money in the market and you got something of a capital gains around 80,000 rupees. The good thing with long-term capital gains taxes, if the amount is under 1 lakh, you don't have to pay any tax. But if the amount is above 1 lakh, you have to pay 10% tax with indexation. Indexation I'll explain in another video. Okay, so that's basically it. So that's long-term capital gain tax. There is another thing called short-term capital gains and long-term capital gains tax. Again, I'll make another video because the subclassifications inside short-term capital gains and the subclassifications inside the long-term capital gains are entirely different. So that's basically it about ELSS funds. Then I hope I didn't miss anything which I was supposed to say. Okay, there are many other tax saving instruments like public provident funds, PPF, National Savings Certification, NSC. So why people invest in ELSS is basically because of the more returns that they get compared to the FDs and other things in the market right now. FDs, ULIPs, NSEs, etc. So yeah, so basically that was it. To give you some of an examples, there are HDFC ELSS tax saving schemes, then Mirai Asset tax saving scheme, then Canara Robeco Equity tax saver scheme, DSP ELS tax saver scheme. It all depends on different mutual fund houses and the fund manager's experience, etc., etc., etc. So it's always better to have one tax saving scheme in your account, in your mutual fund portfolio. Owning more than 2 or 3 tax savings, I don't think it's gonna get you any benefits from that, but basically yes. So that was it. Thank you so much for watching.